Hello from Moted Markets. This is Ahura with short review on US labor market data and market reactions. As always, let's check first the data we had, and then we can see how market reacted to these numbers. We had newly created jobs in November by 227,000, as you can see here. It's much more than 202,000 expectation. I have to mention that the previous week's number also revised up from 12K to 36K, which is normal. We know that the previous months, because of the streaks and because of the storms that we had a very weak numbers in the labor market data. At the same time, we should mention that unemployment rate was unchanged at 4.1% in October, which in this month increased to 4.2% as market was expecting. So 227,000 newly created job, but unemployment rate increased to 4.2%. At the same time, the average earnings increased by 0.4% in November, repeated the same number of October. In the monthly scale and in the annual scale also, 4% average earnings repeated exactly the same number of October. For both of them, market was expecting to see 0.3% and 3.9% as average earnings in the monthly and annual scales. Government payrolls also increased by 33,000, while the private payrolls increased by 194,000. This is both of them, actually, not both of them, we can say the privately sector increased much better than expectation. But in the government's payrolls, we can say that because of that the first week we had the US election. For the election, we had more employed during the November first week. But after that, after the election, governments, this short period employees, we didn't have any other reason to get that because of the election we had. We had some newly hired people for the election stuff, but after that, we didn't need. But that's why we can see that 38,000 hiring for the October, but for November it decreased to 33,000. Even thought that 33,000 part of that is because of the first week's election. But after that, we didn't have this hiring. That's why the government sector had a little bit weaker performance compared to the private sector. Generally, the labor data we can say that the labor data generally is positive. Even thought that unemployment rate increased to 4.2%, but generally 227,000 newly created job, it's fine. We can say that, okay, the labor market still can create a job, and these numbers are somehow standard, same things that we had pre-COVID-19. At the same time, yesterday also we had initial jobless claims and continuing jobless claims. We saw that the initial jobless claims increased to 223,000, but continuing jobless claims fell, which means that the people that they are getting unemployed, they are not going to stay so long time unemployed, and they get hired in 1 or 2 weeks, which means that the labor market is still strong. So but still, after these numbers and considering yesterday's and last, generally this week's Fed speaker's comments, we can say that right now we have more chance for 25 basis point rate cut in December meeting, which means that right now we can count almost 84% for 25 basis point rate cut, while holding the current rate still has a chance by 16%. But generally, that didn't change. Actually, we didn't have big changes here because anyhow, the rate cut, 25 basis point rate cut, had always more than 60% chance, which means even not more than 50%, it had more than 60% chance. And that was what the Fed speakers also were talking about that in the previous weeks, which is so. Numbers are positive, numbers are fine. Unemployment rate increased to 4.2%, but we didn't have such a big surprise here. That's why even if you look at the market reaction, let's check the market reaction. The market reaction even thought, okay, here, even thought the market reaction as US dollar index, for example, even if it fell like at the first reaction, but you can see they're increasing here because the market thinks that, okay, we didn't have such a big deal here. The numbers are still showing that the labor market is strong. Even thought if we had a 25 basis point, if we will have the 25 basis point in rate cut in December meeting, which is expected, which is really expected to see that, but still, even thought that, but with these numbers, we can say that the labor market is still strong. 0.4% average earnings means that the government and the central bank will have very hard challenges to bring the inflation down. But when you have a more income, it means that the demand can increase. But when the demand increases, which means that inflation will have will face so much more challenges to slow it down. So that means that even thought if we have a 25 basis point rate cut in December meeting, 2025 will be. We should be more cautious about what we can expect from the Federal Reserve in 2025. That's why we can see that the US dollar again increase after first reactions fall. So we can expect the US dollar get a little bit more pressures, but that pressure cannot go so long. Especially if you add that in general, we have too much geopolitical tensions around the world, which all of them usually increase the US dollar demand. So these numbers can put a little bit pressure in the stock market in US dollar, but not something that we can say, okay, it's gonna be the pressure on US dollar. So US dollar still can hold its gains, maybe a little bit lower than these levels, but still even 104, 105, it's very high expectations for US dollar. On the stock market front, the first reaction of stock markets was positive. Generally, the positive reaction of the stock market for anything in December is expected. Generally, the December more than 80% times since 2000, we had a December positive. December as a positive month always. So still, we can expect that the December again, this December also market can close higher. Even thought these numbers also can somehow support the stock market, say that, okay, look, now there is a more chance for the rate cut, so you'll have another rate cut in December, which is usually positive for the stock market. So these numbers cannot change the overall expectation of the stock market's a slow upturn performance that we had for December. It can still confirm that. So continuing slow uptrend in December with these numbers for both stock for all main indices, including S&P 500, including NASDAQ or Dow Jones. So generally about the stock markets, we are positive. Slow uptrend can continue. About the US dollar, they haven't thought a little bit can be under pressure, but can still increase. On the gold front, we can say that with the expectations that we have for the US dollar in December condition, the gold also it has still the chance to recover from these levels and continuous side movement with uptrend tendency generally. So we are positive about the stock market. We are somehow positive, slightly positive about the gold, but we are not so much positive about the US dollar index. But on the pressure on the stock on the dollar index also, we are not so much offended on that to say, okay, we're going to have too much pressure on the US dollar. No, US dollar index can slightly decrease, but it cannot be like a fall. So 105.20 and 106, something between 105.20 and 106 is expected for the next side movement for US dollar index. That's what we had in the markets as a data and as a reaction in the stock markets, gold, US dollar, and stock markets. Hope it was helpful for you. If you had any other question, do not hesitate to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.